Good day, ladies and gentlemen, to the uranium update on Commodity TV. The uranium market is in deficit, and after the upcoming ban on imports of Russian uranium into the US, a lot has to happen here. The uranium price itself is nailed down at around $90 per pound. However, this can change very quickly. This is because the global fleet of nuclear power plants continues to grow. There are currently plus 60 reactors under construction. 92 are planned and 343 are in the extended long-term planning stage. The uranium market is in structural and real deficit. Where do the raw materials, meaning the uranium, come from? Supply deficits in the uranium market of around 41 million pounds or maybe even more are also expected for this year. Global demand is around 197 million pounds of uranium, growing at around 2.5% per year. And expected production is only 155 million pounds of uranium. However, this will continue for the next few years. By 2034, the cumulative deficit will amount to around 406 million pounds. Electricity consumption is continuing to rise around the world, mainly due to the many new artificial intelligence, the AI applications that will flood the world in the coming years. Keyword: data centers. A Goldman Sachs study predicts that demand for electricity will increase by around 2.4% annually between 2022 and 2030, with data centers being the fastest growing segment at 0.9 percentage points. That's almost 1/3 of the total demand. A query on ChatGPT requires 10 times more electricity than processing a Google search query. The Electric Power Research Institute, the PUR.V, found that data center power consumption will account for about 9% of total consumption in the US by 2030. That's a doubling from today, ladies and gentlemen. Uranium exploration and the rapid expansion of production in the US are therefore very important. In exploration, IsoEnergy, Premier American Uranium and Cosa Resources should be mentioned here. IsoEnergy is currently starting another exploration program with a total of 30 diamond drill holes with a total length of 9,825 meters on the La Roque East and East Rim projects in order to follow up on the positive results of the winter exploration program. In addition, the previously producing Tony M, Rim, Sageplane and Dannerous mines are being brought into production starting stage, I would say. We can imagine a restart of the mines maybe 2025-2026. Premier American Uranium has just raised 5.8 million Canadian dollars and acquired American Future Fuel. The company is an upcoming top player in the uranium exploration sector. Cosa Resources is now also starting its summer exploration program on its deposits in the Athabasca Basin in Canada. Diamond drilling at URC follows the positive winter drill results and tests the second priority target area. Ambient noise tomography surveys will be used to prioritize the strike at URC and follow the positive airborne survey results at Orion. We are very positive about all three companies. Two top companies in terms of production in the US and forward-looking investments in uranium are Uranium Energy Corporation, or UEC for short, and Uranium Royalty Corporation, URC. UEC was already in uranium production, but mothballed it due to the price collapse. The Irigaray processing plant in Wyoming can now be restarted in August 2024. The capacity is 2.5 million pounds per year, and uranium production at the Hobson plant in Texas could then start in 2025. This could process 4 million pounds of uranium per year. This would make it the largest uranium producer in the USA in one fell swoop in 2026-2027. We conservatively estimate the all-in cost per pound of uranium at $45, which opens up great margins for UEC at prices of $90 and above per pound. The share is worth buying and has generated a buy signal in our pointed figure chart. The slight correction that can be seen in the chart is completely normal and opens up an entry opportunity for new shareholders. Our target price for the share is $18 over a period of 2 to 3 years. Uranium Royalty is the only royalty company in the uranium universe. The portfolio consists of 18 royalties in development, advanced, permitted and producing uranium projects in various jurisdictions. These include royalties on the world-class McArthur River and Cigar Lake mines. The company works with market leaders such as Orano, Cameco, CGN, Energy Fuels, CNNC and Encore. In addition, there is a great inventory of physical uranium and a supply stream with CGN, as well as a strategic arrangement with Yellowcake. The balance sheet is very healthy, with around $330 million in cash and assets, and easily covers 70% of the market cap. The chart has formed the bottom in the $3.25 area, and we see a great entry opportunity here. The first price target is $5. In the longer term, we see $8.50 as feasible. Uranium is and remains a great investment with an enormous future. Electricity consumption continues to rise, and above all, baseload secure electricity is needed with renewable energies together. Together, they will make the world CO2-free, and at the same time, the economy can develop and breathe. You can also find all the information on our Commodity TV app in German and English, as well as everything to do with commodities. We look forward to a like and, more importantly, please subscribe to our TV channel. Please note the disclaimer. The shares discussed are or will be part of the SRC Mining Special Situation Certificates, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.